Eric Thomas pointed out to us, it's your time. This is your time. Your time that you're going to be able to say, we can, we will, we must. And this panel that we have right here are going to share some very insightful information that's going to share some of their struggles, some of their successes, and some vital information that's going to be key to help all of you be able to understand some of the insights that they've experienced. So let's introduce our wonderful panel here. First here, we have Ron Temko. He is the spokesman for C2 Financial Corp. with its headquarters in San Diego, California. He's been an executive in the mortgage industry for over 23 years. C2 Financial is the #1 retail broker in the United States with a 2017 volume of over $2.4 billion with 450 agents. Having been a broker for over 38 years, Ron and C2 Financial are committed to the wholesale channel as the most effective way to fully provide consumers with the best value through the power of choice. Thank you, Ron, for being with us. Next on our esteemed panel, we have Ryan O'Kane from Arbor Financial Group. Ryan is the principal at Arbor Financial Group, a boutique mortgage and insurance brokerage located in Orange County, California. Ryan started his career in wholesale 20 years ago, and Ryan opened Arbor Financial in 2008. 10 years later, Arbor is the home for 38 independent originators, with nearly 50% of its $350 million loan volume being funded through the wholesale channel. Thank you for joining us, Ryan. Next, we have Andy Harris, president of the Oregon-based Vantage Mortgage Group. Andy is best known for his outspoken articles over the last decade supporting wholesale and the independent mortgage broker, while also calling out retail for deceptive practices. Some have called Andy a visionary over the years, from his articles and predictions following the financial crisis. He has embraced all the advantages of wholesale has to offer, growing a small startup to a multi-million-dollar operation. We look forward to hearing your insights, Andy. Thank you. Next, we have Cornell Ho, President and CEO of Global Equity Finance, located in San Diego, California. Cornell has been in the mortgage industry for 14 years. Global Equity was started in 2005 based on 3 core principles: culture, technology, and customer service. 13 years later, Global Equity continues to stay true to their core values, and it is a pleasure to have you with us today, Cornell. And last but not least, we have Ramon Von Walker. Ramon is the founder of Mount Diablo Lending, a mortgage brokerage that focuses on delivering consumers very competitive rates, as Anthony just mentioned. Despite entering the mortgage industry just 5 years ago, Ramon has been placed in the Scotsman Guide top originator list for the last 3 years, most recently achieving the 11th spot in the country for loan origination volume. Ramon attributes a lot of his success to having an extremely competitive spirit, a spirit that embodies winning every day. He also places a heavy emphasis on enjoying not just the end result, but the path it takes to get those results. We are honored to have all of you on our panel today. So now let's just go through how it's going to work. Okay. So the goal is the next 45 minutes or so, we're going to get some deep insight. I'm going to direct the question to one individual, and then of course you can all, interject to the same question. Okay, so let's get started with the first question. Ryan, in your opinion, what are some of the most successful ways that your team generates new business, obtains referrals, and stays in contact with your prior clients? And is there a specific technology that you've adopted to help with this?
So I think we're a referral-based mortgage shop, and I would say the most important thing for generating new clients for the originators on our team and myself personally is networking events and being a part of local networking groups. Whether it's the chamber, whether it's BNI, Provisors, these are networking groups local to our community. I don't know how many people are from out of state, but just getting really active and involved in the networking community, I think, is the best way to build trust face to face. So that's been a lot of the model, or been the model for a lot of our originators. And then, as it relates to converting on those relationships, our company adopted Salesforce quite a while ago, so that's our CRM. I know Anthony had mentioned, basically a CRM, and whether or not you adopt it or not is really the whether or not it's going to work for you or not. But our company tries to take Salesforce and actually take your customers, take your referral sources, to whether on a particular transaction you're going to load your borrower, co-borrower, your realtor, both realtors, your financial advisor, your CPA, everybody that's a possible contact within that transaction gets plunked into the database and then automatically rolled in the drip campaigns. Great. So that way, at least at a very minimum, you're not missing out on a potential conversion, and you can kind of track their activity through your database.
Great. So you found that it was important to build a brand, get out and network, and essentially grow your brand out there to create the referrals.
100%.
And then, of course, hand in hand with technology, so that as time goes by, you continue to touch them.
Correct. Yeah. I mean, your database is your gold mine. I mean, that's and the easiest way to build a database with actual valuable contacts is to go press the flesh and just meet people and put it in the old-fashioned way. And then if you invest in some technology that can actually drip quality content, I mean, quality content, in my opinion, is huge. So I mean, you can get a CRM and they can push out content, automated content, whatever it is, but if it doesn't speak to, like, it's not relative to the current market, it's not actually, meaningful to a problem or issue that they have, it's not doing anything for you.
So how do you make it relevant?
You have to poll your originators, you have to talk to your loan officers and find out, and also just talk to your account executives and be aware of what's happening in the market, and then have a department or marketing group that can actually generate that content within a few days, so you can push, whether it's like high county limits that came out from UWM. I mean, we were able to get a piece out in maybe 3 to 4 days to let our realtors know that was going on. So
great, to communicate. That's wonderful. Cornell, what are your? Oh, I'm sorry. Go ahead. Go ahead, Ramon.
Okay, yeah.
Go ahead.
So we buy all of our leads. Of course, with me just being in the business 5 years ago, I didn't have a big referral base. So I had to decide, how am I going to get clients? And it's buying those internet leads. But the one thing we've done, I think, that's different from a lot of other people out there is, like, just this past quarter, we've gone back. I use Velocify as my CRM. So I got with Velocify, and we put together a system for each individual type of lead that comes into our environment. So a lending tree lead has different logic and is being sold differently than a Zillow purchase lead that comes in. There's also a suite of emails that go out that are totally different for each individual, wherever the lead aggregator came from. So, for example, with the lending tree leads, we know Quicken is buying every single one of those. So we have automated emails that kind of go out explaining the differences between us and Quicken, why we're a benefit compared to them. So you really have to drill down, get customized, attack, and you will win.
That's great. Yeah, Andy.
What we do is we separate it in 2 different categories, one being referral and one being consumer direct, and we don't blend the two. I always hear this saying, I'm 100% by referral. It's like, so is Bernie Madoff, right? I mean, there's a good type of referral and there's a bad type. So we have a big MSA issue in our state. I'm in Oregon and Washington. I'm sure most of you guys do. My concern with the CFPB retraction is that we're going to see more of these ABAs that are legal under RESPA but still unethical, and then we're going to see a lot of the Section 8 issues continue. And so we do want referrals, and that's our main focus, but we diversify CPAs, financial planners, real estate agents. We don't want the realtors to be too big of this pie. And then indirect referrals is having those parties review online and go consumer direct 24 hours a day. Online rate tables, everywhere. Everywhere you can go, ad roll, AdWorks, all these different things. And so we find that this inbound business, meaning inbound leads coming directly to us, working on SEO, our ROI is super high. It's a blend where you're working both angles, but not. I'm seeing technology change the game for real estate, and I think if you rely too much on realtor referrals, it's going to change soon. Seattle open listings, I don't know if you guys have seen that, Homey, all these new things. Agents are being restricted down. Millennials are totally different from other generations. They're huge on reviews. They're huge on, I hope, increasing that shopping awareness. And so education is what we do. We don't say we're salespeople, we're persistent educators. So at wholesale, we have a huge advantage. And independence is what gives us the power. And so I think embracing that on both sides and educating these agents too. I mean, when I meet with these agents and I show them wholesale, they have no idea.
Right.
They have no clue. And with 90% of the market, in my market, in that high margin correspondent world, that's not a sustainable margin. You can't continue with that. And so it is getting competitive, but I think if you educate these agents, it's not just that they refer you more business because they see it. It's like, how are you closing a loan in a week? Or, how are you pricing this way? Because we're literally, the last 3 bankers in my market, all of which we would pay the same, but I wouldn't hire them. They were 1% higher in rate on a VA loan. And that's a benefit. That's not even a loan. So you're talking, you have a disabled veteran, you're charging them 100 basis points in rate. I mean, that's on the originator. They can't claim to be ignorant. I mean, they've got to get educated too. So it's almost been like a recruiting thing where you educate an agent and their best friend Bob that works over at XYZ, the same everywhere, revolving resume, retail, whatever. All of a sudden now you're recruiting this guy because he's like, I need to learn this. I need to see this. How are you doing this? How are you getting this pricing? And so it's a huge opportunity. It's just time. There's not enough time in the day to educate everybody, but collectively we can do that for wholesale.
As a group you
It's
can.
huge.
Yeah, absolutely. Thank you so much. Okay, so our next question for Ron. Independent mortgage broker versus retail lender. What do you believe are the biggest advantages of being a mortgage broker, and what are some of the biggest challenges?
Well, we believe first and foremost in the free marketplace. And the way we're set up is we let our loan officers choose whatever way they want to do their business. We are approved with 50, 60 lenders. And so, secondly, it's all about choice.
Right.
Okay? And not only choice for our loan officers, but it also gives choice to the borrower. And transparency.
Yep.
As a broker, we can take it to so many different lenders depending upon what program they're going to need. And it's kind of the opposite with the retail, okay? It's not a free market. It's one place, one unit. They have their products to offer. It's a one-stop shop. It is not a fact of choice for the borrower. And lastly, the transparency is not there. So it's kind of like I look at the broker as almost opposite of the retail mortgage banker, or certainly the FDIC bank.
Right.
As far as the challenges go, it's obviously we have challenges against big banks that are buying down loans to bring them as customers because they make money somewhere else.
Long term.
And I think that the only way to combat that is to give the choice and a lot of things that Anthony talked about. We need to educate the borrower and understand that they understand what the broker's doing. The other thing too is we all in this room get paid on commission, most on straight commission, okay? The FDIC bank has a salaried employee. A lot of it has to do with empowerment, okay? We're empowered to do the right thing, make the loan, because we really don't get paid until we do the right thing. Whereas there can be complacency on the part of a retail FDIC bank. We're empowered to do our business and get it done in a more efficient way. And then
I think that's great. Does anyone else have any comments?
I think,
Yeah.
go ahead.
Oh.
Well, I was going to say a huge opportunity that we're taking advantage of is the non-QM market
Right.
that the retail lenders don't have. So I know that it's grown to, I think, $5 billion, and I think it's expected to double and triple. So I think
Well, that goes with that options.
That's right. So
Options. Yeah.
I think, and that's a space that I don't think the big retail shops are going to go dabble in anytime soon.
I was going to say not at the moment, probably. Right. Okay.
Yeah, I was just going to say we're faster, and and that's a message that I often give to the clients. Like UWM, for example, every time you do a submission to CTC, they send you out an email. It says, congratulations, you closed this loan in 10 days. Every single one of those, my social media person posts onto our Facebook. So when I'm having a conversation with XYZ client, they're saying, oh, I want to go with Wells Fargo and blah, blah, blah. I say, well, what's the price? and that they're giving you, and they say, oh, 4.75 and $2,000 in closing costs. I say, well, I could do a 4.5 at no cost. Well, that's okay. A quarter's not that big of a difference to me. I say, okay, well, how fast do you need the money on this cash out deal? And they say, well, like pretty fast. And I tell them, well, I can get this thing closed for you in 10 to 14 days. And then I go ahead and tell them, hey, have you ever heard of Facebook? And they say, yes, of course. And then I can actually show them all of these posts
That's great.
where we're
That's a good
closing 10 days,
Yeah.
7 days, 2 days. They're like, this is incredible. How are you guys able to do this? And then we just go ahead and explain to them that really we're superior because of our connections. I mean, we have some amazing companies that we're connected to, right? UWM, Flagstar, they can get it done for us. We're very powerful, but the consumer doesn't realize that. You have to
Educate
disseminate
them.
that message, yeah.
Right. Wonderful. That's great. That's powerful. Definitely is. Okay, so Cornell, what have been some of the most successful ways of recruiting talent from banks, retail lenders, organically? What have been some of the ways you're recruiting?
Well, like Ramon, we're all inside refi shop, and what we found, we're in San Diego, which is mostly a purchase market shop. Everything we do as far as recruiting is organic. We don't like recruiting experienced loan officers because there's not a lot of inside sales loan officers in San Diego. We typically look for three things. We look for master's degrees. We look for East Coast people because they have a work ethic like San Diego people. I mean, I love San Diego, don't get me wrong, but we just don't have a great work ethic. So,
That's because it's too nice out here.
yeah, everybody wants to go out in the sun.
Go
Yes,
back to
that's
New
the big-
Jersey
yeah.
in the cold and
So we look for, yeah, exactly. We look for East Coast people and history. The resume, I want to see a top 10% history of sales. I don't want it to be in mortgage. Heck, if it's in mortgage, fair enough. We might give you a chance. But what we're really looking for is a top 10% history in sales and less than 1 year in management experience. Why? Because for some reason, once people cross into management, they start to slow down. So we also do, we use recruiters. We found that we have great recruiters. We have job postings up everywhere, but we're always in interviews and we're always interviewing. But the thing is, I don't like long interviews. I like 10-minute interviews, short and to the point, and there are a few key questions that I ask that will tell me everything I need to know about this person. And once we are done with those interviews, we go on to the next until we find those star performers.
And Cornell and I were speaking earlier today, and we actually brought up the discussion of hiring millennials. And have we run into any challenges? And how do you interview one generation? Oh, Andy's got topic on this one too.
Well, I mean,
he wants
if-
to speak up.
Yeah, if you're going to recruit inside the
Yeah.
industry, the thing, most of us, I would think, are long-term brokers, and maybe some just came back into the sector, but, a lot of us I know have been here for a while. So there's two types in the industry. It's the pre-financial crisis broker,
Yes.
and there's the post-financial crisis, that has never seen wholesale. They don't even know what it is. And
Yeah.
so 90% of the industry is influencing both,
Yeah.
and for the wrong reason. It's to recruit them. So we're in an industry where recruiting is number one. Number two is mortgage. So on the retail side, if you take all lenders or all originators away from a retail lender, they're not a lender anymore, right? So they can't lend money without originators. So all their emphasis will be on manipulating the minds of those that are not in our sector because they don't want to compete for our business. They want it to be steered to them. And there's no regulation on SRP, right? So what these LOs don't see is that competition, without a platform of competition, it's a broken model. It doesn't matter how good you are. You can be the best originator anywhere, and even if you're doing high numbers, it doesn't matter because you still have a broken platform because you're steering your clients. You're steering them to one lender, one warehouse line, whatever you're doing, you're steering if you don't have the independent foundation. So when you meet with these people, there's good and bad things with both. One, the old school ones that miss the independence, that have the revolving resume like all of them do. They see now, hey, how are you doing this? How is this possible? Who are these investors? And it's crazy when I show them, I use Loan Sifter for everything. I show them all these rate sheets. They're like, who are all these companies? I'm like, this company does like $30 billion a year. Where are you? Like, what's going on? And so we've hired some of them coming back into the sector because they love the independence. So they have a team environment, support, staff, process, everything, but it is with an independent foundation. The others that are funny, and it's kind of ridiculous, is if you get, I had a Caliber employee come into my office, and he knew nothing about wholesale, other than we're middlemen and we don't control, we're not a direct lender, all that nonsense, whatever. And I showed him Caliber's rate sheet wholesale. He's like, well, I don't get it. I go, well, at the end of the day, Caliber is just a pass-through to the agency because we're all TPOs to Fannie and Freddie. They don't originate loans, right? I go, why would you ever work for one of these companies? And the answer is they wouldn't. And then why would a realtor, when you explain this to, why would you refer one of these companies? Because you're indirectly steering yourself. Because you're not going to use them for your own mortgage if they're 0.5% higher in rate. And that was the case. They were literally 50 basis points higher on a conventional loan. He was paid less. He was at like 90 basis points. And government, it was almost 1%. So math and facts, and I tell everyone this, I have OCD, and I always have, and I like math and facts. If I can't support it with those two variables, sales can't fix that. I mean, it's indisputable data. So if you bring data to the marketplace and say, listen, this is how we operate, this is how our channel works, you can sell all day long, but at the end of the day, this is math, and this is factually how it works.
So what do you do in terms of recruitment?
So I find that, number one, be careful. So you don't want to hire anybody. You want to make sure you look at their W-2 so they're producing. As a broker owner, assuming most of you produce, there's some, I know, don't produce, but the challenge is it'll be a demand on your time for training. It'll be a demand on your staff's time. And so when you're integrating them in this world, it's a whole new learning curve. Even if they were in it before, it's totally different now. And so a lot of them have really bad habits on the retail side. So you got to fix that. So that's why, like, when people say, hey, I hire green, it's probably a good idea. There are some good people in the industry that either are really young, motivated millennials that need a better foundation, and they don't know about it. So you need to tell them if you want to hire them. And then you have the old school ones that if they are good people, you can bring them back to the sector and say, hey, retire where you were meant to be. You know, forget this stuff that happened over the last 8 years or 10 years and come back. And so that's, when I sit down with them, it's one of those things where
So do you have a training program that you put together that kind of, one is the brand new to the business track, and one is?
We do. We have a very specific 4-step system. It's all video-based. And
Okay.
the reason why, as a broker, you got to have your own system is because if you have processors working on 30
Yeah.
wholesale lender websites, you got to have something consistent on the front line for the originator. If you don't, it's going to be really tough. We delegate everything to processors as far as online for lender sites and everything. But I think the training of your own system is important, and
Right.
obviously policies and procedures.
Right. Go ahead, Brian.
Our business model is not the opposite of theirs. We only bring on experienced
Right.
loan officers that have started maybe at Wells Fargo at age 20 and kind of gone through the ranks. And I don't think there's a person in this room, if you have a BRE license, that hasn't gotten a postcard from us, because that's the way we market, and I'm sure you all do, and you all know us. But 80% of our loan officers come from a program we have is called ROLO, which is Refer One Loan Officer. And so 80% of our loan officers come from our own loan officers, okay? People that are out there in the marketplace. They talk to realtors, they talk to other brokers, and they say, where are you? We have brokers that have been with us for 25 years, they've been out there. The other 20% come from postcards, you know, from actual marketing. But we like to have the marketing out there, we like to have the postcards out there because it keeps our name out there, it's our branding, and so we're kind of in a different model than
But
that.
that's wonderful, because it's, you know, you can see all different ways that everybody's
Right.
approaching
We
it.
don't get involved in training. I don't have pom-poms in my hand. I don't, you know, that's not our business plan.
Right. Experience.
You come to us because you're experienced, you know how to do a loan, and we have pretty strong compliance on the loan,
Right.
so, you know, and it's, the commission's not paid until the compliance is done, so it's a pretty simple system.
That's great.
I would just add one comment. If there, to the broker owners out there that are recruiting themselves, right? Because that's usually, as you know, when we started our company, my partner and I, a lot of the recruitment was done individually, and that takes away from all the other focus that you have from originating your own deals to, you know, trying to work with your operations staff, et cetera, et cetera. I'd say probably the most critical hire that we made as a company was bringing on a focused sales, focused sales manager that actually is that originates, that understands the business, but freed us up to actually, like, that is your job, that is your focus.
That kind of
And,
sounds like what Eric Thomas was saying.
Yeah, it's,
That's great.
you know, we got out of the way, and it really helped us get to the next level. So.
That's wonderful.
See, we're old school. We just take you, throw you in the pool, and see if you can swim. You have a big manual, you open it up, it says baptism by fire. And then we say, get on the phone, and let's see what you can do.
Oh, that's another way.
Right. Yeah. There's a high turnover, but, you know, I'm looking for a certain person.
But you had mentioned earlier, we were speaking, and you had mentioned that you have gone with the millennials that you do bring in, you use like a reward system.
Yeah. Yeah. So millennials will you know, they have a shorter attention span. They'll jump from place to place looking for a path. Like they need to see where you have mapped out, you know, for them. So with all we call LOAs, and our LOAs focus on the sales side. They don't do anything on the operation side. They're basically sifting for gold, in a sense. So we buy a lot of leads. The LOAs talk to them first. Once they get them on the phone, then they'll transfer them to a loan officer, okay? And they get rewarded based on how that transfer happened. Well, if it was a transfer, they'll get like $100. If it was them actually just guiding the individual to the website so they can do it themselves, because we have a pretty good website, then they'll get $200 for that. But everybody in my office is incentivized. There's an opportunity for everyone to make more money and a good amount of money, but it's all based on performance. It's all based on really speed. It's constant speed. And then I try to make sure I can deliver a competitive price for them, and then we just let loose, get after it.
Very interesting. Okay, so Ron, it's a very exciting time in our industry right now. What are your predictions pertaining to the primary mortgage market, technology, and the wholesale channel?
Well, refis are going to go down, that's for sure. But there's other.
Picking on us, huh? I'm pulling out my guns next.
That's my prediction. Okay, I'm thinking. But there's opportunities. There's debt consolidation, cash out for investment. The new tax law is not allowing deductions for HELOCs, so maybe there's consolidation of refinances in that regard. There's a big move. A lot of baby boomers are downsizing, and so there's a lot of opportunity there in the purchase market on the baby boomers. And as far as tech goes, you know, the Masters was last week, and Ricky Fowler came in second place. And Ricky Fowler, on the side there, had Rocket Mortgage. And Ricky Fowler is going to win a Masters one of these days, and he almost won it this time, but he's 29 years old. Now, Quicken Loans can hire the best advertising agencies in the world to figure out we need Ricky Fowler or someone like that at 29 years old to appeal to the millennials, okay? And so I'm concerned about our industry in terms of capturing the millennials, and a lot of that has to do with tech and being on the phone and that sort of thing. And I think there's the main technology effect will be when the next refi boom comes, because this is a purchase market now. So you can count on 2021 that if you aren't prepared, what Anthony's doing here, it's going to take some time, but by that time we should be up to speed in tech and be very competitive with the Quickens of the world, and that's really where I see it going. And so I think we all need to embrace what's going to happen with tech and what AIME is doing, and I think you're going to be, you just have to be there. And our company, for example, on our next meeting is going to be all about tech, because we need to get all of our people up in tech. And it's going to be evolving, it's going to be changing. There's going to be new vendors, there's going to be new things. So we can't afford to hire Ricky Fowler, but we can certainly get tech. And I think that's going to be a big issue in the next refi bill.
Great.
You know,
Go ahead, Courtney.
I couldn't agree with you more, Ron. I think that there's two major things that are coming. One is technology. Every technology keeps on improving and going faster and faster every year. Every lead, especially, and it is a down market for refi, and that just makes it even more important for every lead to be capitalized on. So we have about 8 to 10 different technology programs that are all designed to go after that lead and attack it every way, from text messages, calls, going in our retention, but every single platform we can attack a lead, we are. But it's not just that, it's also the culture within the company. I think it's going to be extremely important in the next 5 years. The millennials are coming, whether we like it or not. You know, we joke, we laugh, but they're here. And they are the future. The average originator age is what, 51, 52? I forget what it is. But that's not going to last. They're going to retire. Then who's going to take over? It's going to be the millennials. And the millennials care about two things, like Ron said, technology, culture is everything to them. They want to see a long-term future. They want to see that they want to see the company when they interview. It used to be when you go on an interview, you would go on an interview, you'd leave, and that was it. Now, with a millennial, you have to take them through the building. You got to show them the dream. You got to really sell the millennial, this is your future. This is your family. This is where you're going to be long-term. And that's a really big change that I think is coming. It's not only coming, it's here. And for growth in the future, we have to attack those.
Go ahead, Amy.
One thing it's good to do is just watch what consumers are doing, their behaviors, especially millennials, because that's most buyers now are millennials. But we're, the Northwest, Washington, Oregon, are one of the highest demand of relocation, people moving there. We got big tech, we got like Amazon, Boeing, Nike, Intel, Adidas. I mean, we got a lot of big companies and a lot of people relocating to Oregon, many of which on California wages. They're still, anyways. So they're buying up our housing and watching what they're doing. I kind of watch the Seattle market to see what's happening and what's going to come south, which is about 60% of our transactions up there have realtors giving significant amounts of commission to the buyer and seller. They're on rate tables, agents, and we're starting to see not just the Redfins, but you're seeing a very competitive space restrict the commission on the real estate side, meaning if you're putting all your eggs in realtor referrals or your eggs in one basket that way, I wouldn't advise that, but more importantly, it's showing that the borrowers, about 60% of our transactions, again, have those credits from the real estate side. And so it's just showing where tech is going to go and dealing with a lot of engineers and millennials and just seeing their behavior. On the refinance side and on the listing side, if you're a savvy homeowner or you have a loan, you don't really have the need as much, in my opinion, from what I see, with consumers saying, why am I paying 6%? Or why don't I just do my loan online? I don't have to close by this date. This pricing looks good. There's a bunch of reviews. So refinances can go all online. That could be really where it's going. So we have to embrace that tech and be able to do that as well online with sharper pricing, with being local, with our own reputation online, to compete with these internet lenders. And so those are heavily marketing refis. You really got to shift it to purchase, because on the purchase transaction, even though some buyers might see those agent commissions for their down payment and everything, they still need to be, they're handheld. I mean, millennials still want that interaction with us, and we have a huge value to provide to them. But you got to be competitive. You got to be competitive on price. You got to be everywhere, but you got to put emphasis on the purchase and embrace the technology the best way you can and be ahead of it.
So
watching
would you
trends.
say that the technology is a very important component, but do you feel that we still have that need for the human touch?
Absolutely.
So
Yeah,
it's a combination of those two.
You got to be like a robot human hybrid.
You need a hybrid.
One thing I want to add
Yeah.
is, as these retail lenders get up in technology, I believe there will be commission compression.
Right.
Because there's going to be greater efficiencies in the market.
Right.
And so as these bigger companies have greater efficiencies, it's going to force us at the broker level to have commission compression. So you have to have greater efficiencies of yourself and as a broker
That's a
and
good
as
point.
a loan officer to make a living, because there will be commission compression with higher technology.
That's a very good point. Okay, so it's been very informative. You guys have been wonderful. Your insight is amazing. So I think we're down to our final question. And the final question for the entire panel, so we'll just go down, is if you could give one piece of advice to a broker owner or originator today, what would it be? Ron?
Recruit the best people. It's all about recruiting, get the best people.
Immerse yourself in technology.
Okay. Andy?
I would say always control your balance sheet. Don't let it control you. Remain as liquid as possible and suggest all your staff do the same.
That's a good point.
I would say partner with wholesale lenders that really want to build a partnership with you. Every single loan that we do, and I didn't realize this, 100% of them, I didn't realize this till I walked here and came through the doors today, is going to one of the lenders that are here today. So we do 150 loans a month. Every single one of them goes to one of these lenders. And is that coincidence? I don't think so.
Yeah, mine's a little different. More in the spirit of Eric Thomas.
Good. Well, good we ended with you. There you go. All right, come on. Bring it home.
So I just put, because this is something I do every day. Like, seriously, I really do. But enter every day with the proper mindset. Don't step out of your front door without the mentality, I will win today. Because if you step out, if you think about that as you're walking out your door, so actually this happens to me, like subconsciously, as I walk out my door every day. If I'm not in the right mood, you know, I'll slap myself and get in the right mood, right? So by the time I'm in the car, sometimes I scream it that, you know, I want to win today, you know, and then go into the office. And
Or
then
you,
the
listen,
juices,
or you listen to a podcast that's going to put you in the mood, right?
right. And that really gets the juices flowing. And after that, you know, ideas will come, and because you know your business, you're out there you're on Main Street, you're dealing with the clients every day. There's a grand idea in every one of your minds. You just have to dig it out. That's it.
Can I say one more thing?
Oh, yeah, of course, Ron.
Over the last couple months, I've been on the phone with Anthony in dealing with Brawl and other things, and this is the first time, and sitting in the audience, that I see the total vision of what he's trying to do, and it's a big, big, big agenda. And I think it's very important for everyone to embrace this and work towards this and contribute to it. C2 is going to be a great supporter of this whole program, but it's a big agenda. There's a lot of moving parts to it, and I applaud him for his efforts and what he's doing.
I agree.
Thank you.
I agree.